It's all over. Things just got worse. Hard landing incoming. Hey, everybody, you're watching Bull Boom, Bear Bust, back with another dose of economic reality. And yes, we have a lot to get into today because things just got worse as we predicted here. Inflation will not continue to fall. In fact, you're going to see inflation go even higher from here. Let's go ahead and start right here. CNBC article: Consumer prices rose 0.3% in December, higher than expected, pushing the annual rate to 3.4%. Now, up until this report came out, there was all this optimism on falling inflation, but really, it should not have been optimism to begin with, because falling inflation doesn't mean prices are coming down. It just means they're not going up as fast as they were previously. So when people have too much debt and they can't afford the cost of living currently, is it good news that prices are still going up? No, it's bad news. We need deflation. And we already see the talks of rate cuts from the central planners. And we know that that's not good, because if inflation is a problem, why would you even think about cutting rates? Well, that's what they're talking about, because they know that the debt is too much for most people to sustain, because incomes are not keeping up with it. And all you have to do is look at all the evidence. Look at the jobs numbers. The jobs numbers included a record number of people working second and third jobs. But that was being reported as good news. So everything is kind of twisted backwards, upside down, and inside out right now. Bad news as portrayed as good news. That's why we all have to pay really, really close attention, not to just the headlines, but to what's behind the headlines. That's what we like to get into here on this channel, let you know what's really going on. And that's why I like to call it a dose of economic reality, because what's really happening and the reality of the situation a lot of times is much worse, and in many cases just the opposite of what's being reported. For example, here's one that goes way back. The US is the world's richest nation. Do you think that's true? Well, if you count borrowed money as wealth, then yes, it's true. But the truth is, the reality is, we have the most debt than any other country in the world, not just currently, of all time. We're the world's largest debtor nation, the biggest debtor nation in history. Yet most of the world believes, because we have the ability to conjure money out of thin air or to borrow it, that people believe we're the richest nation. So you have millions of people flocking here, from across the globe, thinking that we just have unlimited amounts of money to give out. Well, technically, you could create this money with a click of a mouse, because it is a completely fiat currency. But you see the side effects of that when you completely try to cover all these costs of everything, and now costs from all the people coming here from across the globe. You're going to see massive inflation. You're going to have limited resources and a lot of money out there being thrown at limited resources. That's going to equal inflation. That's why we know inflation, it may slow, but it will not deflate. They're not going to allow deflation unless we see some sort of freeze up in the money creation system. And that would be a transformation that we haven't seen here in 100 plus years. So people that look at the odds of that happening are saying that's very unlikely. That's not likely to happen. But there's risks out there making it more likely to happen. We have the risk of war, cyber attacks, power outages, other unseen, situations that arise that could throw this whole system into chaos and into darkness. In that case, the money flow gets shut off. Then you'll start seeing deflation. But it's looking like they're going to try to prop this whole economy up, including propping up a lot of these markets. So we'll see. We'll see what happens with the rate cuts if they cut rates. But remember, if the Fed continues to look at false economic numbers like the jobs data, which is actually bad news, even though they reported it as good news, if they continue to look at that as good news and use that as justification not to cut rates because they think the economy is actually doing good, then we may not see rate cuts. And that's going to have a whole different set of consequences for the economy. Let's go over right here. Big banks mull the unthinkable, suing the Fed. This is crazy. So why would banks talk about suing the Fed? Big banks have hired one of the country's top trial lawyers and are preparing to sue the central bank. Nearly unthinkable challenge if sweeping new industry regulations aren't watered down. So this goes back to the reserve requirement, and the banks, they don't like this because It's easy to make money when you don't have to have any money in reserves. You can give people hardly anything for depositing money into your bank, but then you loan it out at, depending on what type of loan it is, a credit card, 20%, auto loan, 10, 15%, mortgages, 5, 6, 7%. When you loan it out, but you don't have to have it actually in deposit, it's really easy to make money. So when they try to change the rules to make things actually fair, then the banks are not only fighting back, they're talking about suing. How crazy is that? How insane is this? What we're seeing? They should just be happy that they got away with this for many, many decades with this way they can just conjure money out of thin air and loan it out with interest attached. Just think if you or I were able to do that, we would all be multi-billionaires, and people would be looking at us as, oh, look at these great investors. Just like they look at these CEOs, they say, oh, look at these profits of these banks. These guys are geniuses. They're so great. They deserve all the pay packages that they get because they're so profitable. How can you not be profitable when you have money that you can create at the click of a mouse, loan it out with interest attached? It's impossible to lose money in that case. So then some of you say, no, JJ, sometimes, these banks fail. They're not always making money. Well, the ones that failed were allowed to fail. They were allowed to fail, or they were allowed to get taken over. All the banks out there right now are insolvent, just like the ones that were allowed to fail. The problem is we have the too big to fail banks. They're not going to be allowed to fail, no matter how far underwater they get, no matter how many bad loans they issue, no matter what the reserve requirement is, even if it's zero. They still don't have enough money to meet the loans that they've loaned out. So right now, technically, they're all insolvent. But of course, the decision makers and the central planners, they're saying that these banks, have to stay operational. So of course, there's going to be pushback on this reserve requirement. The son of former Supreme Court Justice and well-known conservative litigator is quietly drawing up a lawsuit seeking to block the proposed rules on behalf of Bank Policy Institute, a trade group that represents JP Morgan, Citibank, Goldman Sachs, and others. People familiar with the matter said it would be the first time in recent memory that the industry has sued the Fed. That's crazy. The new rules would say banks have to hold 20% more capital, a buffer they would build up by stocking away profits that might have otherwise went to shareholders. In other words, they would have to decrease the stock buybacks that they use to enrich a lot of the insiders, and they would have to have more money set aside as a buffer against losses. So less buybacks, a bigger buffer. This would otherwise go to shareholders, employees, and also could be used for acquisitions of other banks. The banks say those numbers are off and have produced their own analysis that puts the add-on closure to 30%. Right? So we'll see how this plays out. I really doubt they're going to implement these rules because that would really throw a monkey wrench in the whole system of lending money and make it much more difficult for banks to loan out money. And we know that for the economy to continue, just to continue shedding water, not even growing, but just to continue without imploding, you need ever increasing amounts of debt, and that means banks have to be free to loan out money that they don't have. Otherwise, the entire pyramid Ponzi scheme comes collapsing down. And so that's why I think this is very unlikely to happen. I also think that the ending of the emergency bank rescue program that's supposed to end in March, I think that's very unlikely to be stopped, because that would be an instant deflationary event. And that would be a really surprise or shock event that could bring down not just the markets, but the entire economy. So I think they're going to do everything they can do to keep it propped up. That's why I think it's only going to be some sort of surprise or shocking. Let's talk about the wealth transfer, about how the rich are continuing to get wealthier and the poor and the middle class continuing to get wiped out. We had cited a statistic here for many, many years that the top 10% own about 90% of all stocks. Well, it just got worse. Let's take a look at a chart right here. It comes to us from Axios. Axios. And you look to the right edge here, the top 10% now own 92.5% of all stocks. So we know who's getting rich in the stock market. You may do okay in the stock market. I may do okay compared to what these mega rich are doing, the corporations, the hedge funds, The mega billionaires, 92.5% now. So things got much, much worse. Going back to 1990, it was already bad. It was over 80%. So the wealth transfer, the wealth shift is continuing to worsen, and it's tilted towards the mega wealthy. Why? Because they can create money out of thin air. They can borrow money, billions of dollars in liquidity at the click of a mouse. Therefore, they can buy up assets when prices dip, and they sell it when the price goes up, and they have even more money. And so the rich stay rich, and not only that, the rich get richer. So we have to be on top of this. We have to be of the mindset of the top 10%, even though we don't have the ability to create funds out of thin air like they do. We have to at least know the game so we know what's going on, so we can navigate this and get through this economic situation. All right, everybody. So thanks for watching. What do you think about this latest chart? What do you think about the CPI number, inflation getting worse? So it ticked up, unforeseen though, according to them. What do you think about the banks suing the central bank? Insane, right? It's going to continue to get crazier, more insane. Please tune in for more. Please give us a like if you like what we talk about, and it does help us get the video out there, get the algorithm going. And we'll see everybody very soon. Keep stacking, everybody. Bye for now. Peace.